on Sky News Business. This is Trading Day, the close.
Nice to have you company into the second hour. We take you on live at 5 this Tuesday, and a market that kind of was one of indecision but ultimately failed to fire. 4.4 billion washing through the system. That's light on as we push into the main week proper. Certainly led lower by falls in energy and mining stocks, with banks split down the middle. AMP in clover, it needs to be, because it's a worry if you look at long-term trends here. This, though, is Credit Suisse now upgrades it to outperform. Price target $5.60. Also making news in the Australian dollar in focus, the monthly business survey from the NAB finding both conditions and confidence supported. Question being, will these good times run through into tomorrow's consumer story? And all eyes on BHP. The activist Elliott's met investors as part of its push to abolish the miners' dual listing in Australia and the UK. Big Australian was off-key today, so too was rival Rio, and put that alongside a bit of a mixed picture on banks. No surprise, we just held the line. It was a line ball call, essentially. Adam, welcome into the show.
Thank you.
From Shaw's. We're just off to one side today, noting the performance of some of those fund managers in this environment. I mean, the active v passive debate alive and well.
Absolutely.
Particularly with the notion of rates rising globally.
Yes.
There being blood on the floor, on the dance floor soon. And that could be very attractive for active managers.
Yeah, I mean, well, the argument is that the active managers don't outperform consistently over a longer period of time.
Correct.
Whereas the passive managers will, they're an index, so they will just continue to move with the index. So with a low tracking area, you know, most of my clients will have some kind of passive or index position in the portfolio, but we do look for that active manager to come in, and especially when times are a little bit tough, like in the US market, you know, we like a value operator inside of there.
Speaking of the US, we're going to get to crude into tech. Just bear with me. Here's our link via Ardent Leisure. Why so? Well, because we know that a big part of its business comes from North America, and particularly out of Texas. When those oil rig workers are feeling good, they go down to the 10-pin bowling alley. That's what we were told, at least. That's how they get rid of all their aggression. Them balls. Go figure. Adam, your thoughts on that?
Well, the big Lebowski's live and well, isn't it?
They were, look, 1 month high today for Ardent.
Yes,
so
Ardent, yes.
It lost where it's due.
Yes.
Again, they've been chasing, though.
They have.
Are you liking the story around crude pricing as some kind of a backdrop play to this? Get it in a sweet spot, and they shall come, the workers, to your event.
Yeah, well, it's a little bit of a
stretch?
Probably a spare. Yeah.
Right. Why do you
Not
say
a strike.
But you know the lingo, I don't, but carry on. So you're hiding your light under a bushel, Adam Dawes. Carry on.
Look, I think Ardent needs a little bit of love here. I mean, but it has been trading in that range, $1.80 to sort of $2.20. Sort of has, as you can see on the chart there, has been moving sideways.
And who needs enemies when you've got Gary Weiss as chair now? So on the board, they're in a sweet spot, are they not?
Yeah. I think that but there's still, you know, you've still got that theme park overhang. I mean, no matter how good your bowling alleys are or the entertainment division, how good it is, you've still got that overhang, and that still needs to be addressed or still needs to be working. We're coming into our summer, which is going to be the big season for the Gold Coast and whatnot. So,
what about a marina with some houses abutting that and some shiny boats? Just flog it. Just basically cut the pretense. Turn those waterways where you used to chug along in a little, you know, whatever.
And put something nice there.
Private marina. A little bit like Sanctuary Cove.
Right. With another theme park right next to you, screaming roller coasters.
Well, no, I'm saying shutter the theme park.
Shutter the whole thing.
Cut the pretense. It's like Butlins, 1960. No one wants to go anymore. They're on $9.99 fares to LA.
Yes.
The real Disneyland.
The real Disneyland.
Right?
Which
they innovated.
we're looking at next year.
6 months.
Absolutely.
They'll change the whole concept.
Yep.
Well, what does Pete McGuire make of it all? Pete, welcome into the show, live from xm.com. Your thoughts, Pete, on... We're trying to sort of strategise on behalf of Ardent, but in the back of our minds is that crude story that's generating the kind of, you know, the very notion of corporates flailing or firing. How are you seeing the crude story proper on that score?
Well, good afternoon, Carson. Maybe one thought is you've had so much hurricane damage that the guys have been taken off rigs naturally. They're looking at leisure and they may have gone and played bowls. As Adam messaged.
There we go.
And I'm being serious on that. And we've just had Hurricane Nate roll through there. You know, one of the interesting points is we've got a big discount, WTI versus Brent, nearly at $6. And that's been a surge for US exports as far as crude. And I think we're running at around about 9.65 million barrels a day, so very, very strong export and huge production numbers coming out there. So overall, the US is looking stronger, and it's wonderful for their shale producers. So it's an uptick all the way through.
And just on that kind of phenomenon, Pete, do clarify, because they are still, in spite of those numbers on export, they're still a net importer, right, of the stuff.
Well, exactly right. I mean, you know, if you look at the numbers, I think, you know, crude consumption in US is around about, even with all the Teslas, you're running at around about 20 million plus barrels a day. So they're a huge consumer, 300 plus million in the population. And what is it? I think it's every family has a couple of cars each. So, you know, that seems to be the number, and that's not really going away, is it? Mobility is the key to the US.
Well, okay. Well, meanwhile, sort of in their own time, OPEC look to be still pushing some of those key members for an extension on agreements, so that breakthrough that we saw last year washes through the better part of this year. And where do we find ourselves over it? What's been the consensus, Pete?
Okay, well, we've got a meeting on the 30th of November in Vienna. That's the second meeting for the year, the major meeting. And then we're 31st of March. The cuts. That's how far they push them forward. Our President Putin has said that he wouldn't mind, and he'll go along with it if they need to extend those cuts all the way through for the rest of 2018. So I'm going to put a finger out there and say, you know, hand in the sand, we're going to be looking at probably increasing those production cuts for another 3 to 9 months at least, I would say, for the balance of 2018, what OPEC are trying to prove on 30th of November.
And just to be sure, you didn't say our president, did you, Putin? I mean, that wasn't Freudian slip.
No, sorry, I don't. Well, if I did say that, I didn't mean it.
That's all good. Adam, come in on rig count. Baker Hughes, give us a tally.
Yeah, looking like that the rig count is a little bit lower at 748 as of sort of yesterday. So, Pete, does that sort of mean that that's sort of stabilising the oil price, or giving that sort of, giving that some stability to that oil price?
Well, I think first off the stabilising effect, we've had back-to-back, 3 major hurricanes through that region, which in turn would have slowed the whole production side, and of course, you know, guys starting new rigs. So they're probably waiting for the end of the season, which is traditionally the middle to end of November, and then we may see an uptick. But with that large premium Brent versus WTI, Adam, then I think that there's enough horsepower there to probably increase rig count. And I would say that, you know, the start of 2018 could be a nice time for that, and a good time for those guys to get back into production and probably, you know, knock that number close to 10 million barrels a day.
Yeah, it seems that the sort of market sentiment seems to be getting stronger for these guys, and they're sort of, I guess, raising their sort of bullish bets on the crude futures.
Well, that's right.
Yeah, that's sort of been the third week in a row that this trade starting to roll on.
Yeah, well, that's right. They're the hedge funds and, of course, the money managers, and they're seeing opportunity. It's well sold off. Last week was a real, you know, wake-up call. Brent was off around about 3.3%. We had 4.6% down for WTI, so a huge correction. And that's, you know, allowed these guys to look at that. They think there's further upside, stacking positions and so on. Few would have got burnt, I'm sure, but it's been a very, very strong uptick over the last, you know, month or so. And on the back of that, Adam, we're also concerned where the value of the US dollar is. It's had a really nice move upwards. You know, have a look at the euro, 117, our dollar at around about that 77 mark. So that's really a wake-up call for, you know, US dollar. And on the back, of course, what happens to the Fed, and everyone's saying we're going to see a December rate rise. So we've got a very interesting, you know, probably 45 to 60 days ahead of us.
And that does inevitably act as your handbrake on gold running up anymore, does it not? As you get the positioning such as it remains, that hasn't already occurred on that Fed December story, ergo inflation, ergo one key support for holding gold or silver seems to melt away.
Yes, exactly right. You know, when you think about that, it's had a very solid push down. around that 1260 to 1280 sort of number, and the likes of Goldman Sachs are even saying you could see $1,100 handle, you know, 1120, 1140 sort of number. And that's all on the back of a couple of things. The first off, the geopolitical. What happens as far as, you know, the North Korea situation, and does President Trump do something, you know, whatever he does over the coming months? Secondly, the value of the US dollar increasing due to the concern there as far as it was sold off the US dollar index heavily, and rate rises towards the end of the year. So all of that goes into the melting pot. And I think you'd have to be a, you know, you'd have to be a contrarian to say that we're going to see stronger gold from here. I think most market participants are saying it's certainly looking bearish.
And looking at the PBOC's holdings, holding off for an 11th straight month in September.
Yeah.
Now, that trade was actually a losing one for our RBA, was it not? We got some losses on the books there at Martin Place for holdings in the precious metal. But, I mean, do you take anything emblematic about the whole central bank voting for or against in years gone by as a signpost to even these PBOC moves? But are they right or are they wrong?
Well, I would have said the PBOC, possibly you've had that Golden Week period in China, so in turn I think that was holiday mode and
but this is 11
shares.
months now, right? This is now the 11th month that they've held off.
Yes, exactly right. But I would just say that they probably didn't do anything in that month leading into that holiday season. Things may change. Let's have a look at what happens. I mean, they're very good strategic buyers, and they're probably realising that, you know, US dollar, have a look at the renminbi and what goes as far as that cross trade there, and then gold could be cheaper. So it's far better, silly to buy, you know, when it's high. Might as well buy it the same thing when it's cheaper, and they seem to do that well with the likes of copper and iron ore and so on. So they're seasoned veterans at it.
Yeah, Pete, you just mentioned, sorry to diverge a little bit, but you just mentioned iron ore. You know, there came iron ore. Obviously, Chinese traders have come back after a sort of a week-long holiday. And you know, you talked about that divergence between the WTI and the different oils. We're seeing that in the iron ore market as well, with the sort of the higher grade iron ores getting a better price.
Than the weaker.
So,
the weaker grade.
Yeah.
Well, that was the issue, Adam. They had too much stockpile on the wharves as far as the weaker grade. The higher grade was, as far as utilisation, and there was a premium paid for it. And I think it's the same as what we're seeing, you know, in the crude market. Though, you know, Brent versus WTI, that's a different matter again. But yeah, I think that was the major concern there. Huge stockpiles, record levels, wharves and warehouses full. So that was probably the ingredient to it.
And what we saw was it Deutsche? I believe it was Deutsche cutting Fortescue by some 9.1% yesterday. Right. Which in the event, perversely today, bucked the downtrend and rallied 0.6%. So in spite of the naysayers, it's still got the true believing buying interest running. What do you make of this? 5 and 5, Fortescue. Because there was a sense of getting overbought versus it's cheap in that band.
Yeah, we're still fairly bullish still on Fortescue. I think, you know, they're going to do okay. The dividend's going to be held there. And, you know, with yes, they don't have a higher grade compared to something like the BHP or the Rio, but certainly cost cutting and I forget, Pete, you know the figures, but it's about $11 per tonne.
Yeah.
Cost. So, you know, if we're trading it sort of, it's a good profit margin on 188,000 tonnes per annum.
Yeah. Then again, it is a one-trip pony. So,
yeah, but it's a nice trick to have, isn't it?
That's very, very true. So, in other words, why take your eye off the prize? Why diversify? Because they're calling, or some are saying, Nev, let something of the cat out of the bag, or maybe it was just sort of a moment of indiscretion at a conference on the mainland, Pete, talking up the options on diversification. When you're looking at lithium, when you're looking at these, the next wave, you're looking at China now building the most electric cars than anyone else in the world.
Exactly.
Even as we sit here, is that the smart money parlay story they should be looking?
Well, you would have to think so. I mean, first off, you've got, you know, the demographic, and secondly, you've got environmental as far as pollution and so on. So it makes a very good, I think, strategic move to look at how many electric cars are going to be bought and operated there. Roll the same sort of numbers, I'd say, probably 5 to 10 years out across India. So all of those go into the mix. Rare earths, lithium, and all of those. Yeah, I think any strategic, you know, company that's mining would have to look at those opportunities, and no doubt, you know, Forrest and et al. will certainly participate.
And go and read the PhDs online as you're doing that as well, just to look at some sovereign risks.
It's had a cracker of a run though, Linus, hasn't it?
Has it?
Yeah, it has.
Can we chart it?
Well, yeah, well, I think it was running at about 8 cents a couple of months back. I think it's running at about 21. I don't know what it is today. Adam, what did it do?
I'm just checking now for you, mate. But
right.
yeah, no, it's had a cracker of a run. And
up 150, 160%.
Yeah, trading at 22.5.
Yeah,
22.5.
New yearly highs there.
Yeah.
Yeah.
You know, it was well sold off, and that's a great, a great example as far as, the price volatility. Again, noted, rare earths and commodities. You look what happened to gold, and have a look what's happened to the glory days as far as crude and so on. Linus is a classic example, and now it's having a resurgence. So
rare earths, yes, but what about uranium, mate? This is the same thing. We've gone through this. It's unloved. Now, what about uranium? Do you think it's the next one?
Well, I think uranium's a different basket completely in the sense of nuclear and so on. There might be some love there, but, the rare earths and the electric vehicles and those sort of things, I think, has a different temperament to the market.
All right.
And let's just see, but, there might be further upside for that rare earth space.
Good to talk. There you
Thank
heard
you.
it, live from Pete McGuire. XM.com. Have a great rest of your week, Pete. Talk to you soon. And indeed, we are going to launch off from that to this coming up live over to London. We take you. Yes, that's right, Adam. Into London territory we go. Steve Keen from Debunking Economics. Wouldn't be a Tuesday now without Steve in London town. We'll talk to him live for you next.